Netflix shares marginally higher Tuesday after the market closed when the company reported its second quarter financial results. Welcome to Variety's second quarter earnings coverage. I'm Heidi Chung, media analyst and correspondent for Variety Intelligence Platform. Netflix reporting earnings per share of $2.97 on revenue of $7.34 billion. The company adding 1.5 million global paid subscribers during its latest quarter. VIP media analyst Kevin Tran is here to break all things down Netflix with me. Now, Kevin, it wasn't the worst quarter ever for Netflix, but the subscriber number might have been a little disappointing to Wall Street initially because we did see the stock dip before pairing those earlier losses. I want to get your thoughts here on Netflix's second quarter results.
Yeah, it was interesting to see Netflix. They came in ahead of their own guidance for the quarter. They forecasted that they would add 1 million subscribers globally during Q2, and they did beat that. But my big takeaway was that I thought that Netflix's growth in certain regions outside the US would have been stronger, given that, there are certain regions outside the US that haven't recovered from COVID as well as the US has recently. So we saw Netflix's year-over-year growth in APAC subscribers grow by 24% in Q2 of this year. That was lower than 55% year-over-year growth of the figure in Q2 2019, which was the most recent Q2 that wasn't impacted by COVID-19 restrictions. So again, I thought it was interesting to see that even the fact that there was a potential for some COVID-19 subscriber boosts globally, it didn't appear that helped, Netflix as much as it could have.
Okay, enough about Q2 because that's all in the rearview mirror. Let's look ahead here to Q3. Netflix guiding that it expects 3.5 million global paid subscribers in the quarter that we're in right now. Now, the competition in the space is stiff when we're thinking about streaming, right, Kevin? So do you think with content production ramping up, this is going to be enough to keep Netflix competitive in the space?
Yeah, I don't think we should, underestimate what the power of a big TV series or movie original for Netflix can do. They've talked about how COVID-19 has delayed production with certain titles that they thought would come out earlier, but with big titles planned to come out in the second half of the year, like The Witcher, which is, one of Netflix's most popular TV series, as well as Red Notice, which is a big action movie with The Rock. And I think that it's important for Netflix to release these types of big movies and TV series that can turn into almost spectacle viewing events as other video streamers try to do the same. Like, for example, we see, of course, HBO Max debuting the day and date Warner Bros. Movies this year. Even Prime Video is developing its own big Lord of the Rings TV series. So I think that these big movies and TV series will help Netflix in the second half of the year.
All right, so speaking of Netflix's strategy going forward, we got some really interesting comments from management today on the earnings call. We had Reed Hastings saying that, you know what, all of the newer focuses from the company, whether it's merchandise or gaming, aren't really meant to be significant profit drivers for the company. And instead, they're just there to enhance the core product that Netflix has, which is streaming. I wanted to get your thoughts on that strategy for Netflix. Do you think gaming, do you think merchandise could be anything significant for this company going forward?
Yeah, I think that, what you just mentioned is a good way to think about it, and that it's just a way to enhance the core Netflix product initially. Of course, we don't know exactly what route Netflix will take with video games. We know that they mentioned that, it'll be mobile focused, but exactly how heavily they invest into building out these video games, I think is a big variable for how heavily that can attract new subscribers on its own. But I think that just having the video game option at no extra cost to subscribers is an important differentiation factor for Netflix. And it could help the company appeal to specifically younger viewers who view a lot of their video on mobile devices.
All right, Kevin Tran, VIP media analyst, thank you so much for taking time to explore Netflix's second quarter results with me. For more in-depth analysis, head over to variety.com/VIP.